Hello guys, welcome to one of my first videos where I'm gonna be mentoring you just through simply looking at my portfolio and how I handle this and I manage my trades and so on. So it's something that you could just look at and follow in your own paper portfolios on thinkorswim in simulated trading. So in this case it's just a sort of an indirect way of me giving you some tips and showing how you can trade and basically manage your own portfolios without me being live and actively speaking to you. So it's going to be sort of like, I want to create a little product around this where I'm just going to be doing this every week, and you can just subscribe to it and kind of see how I manage portfolio, copy that in your paper, or basically just take some tips that I'm giving to you and yeah, give me some feedback and so on. Could be interesting. So, but first of all, I need to show you this, just something to remember. I'm doing this only for like education purposes. So education purposes. It's not something that like I'm giving you advice how to trade, and trading involves risks and you may lose some money, you may make some money, but you can also lose some money. So therefore, it is important to know what I'm doing here, what I'm presenting here is simply educational. We are all learning, I'm learning as well. I'm showing you how I trade and how I manage my portfolios and how I create all these fancy things, but I'm also playing around here a little bit because it's a paper account, meaning that I may take a little bit higher risks that I would on my live portfolio. So please don't just blindly copy or whatever. Remember, it's for education purposes. I take no responsibility for what the hell you're going to be doing on your accounts, okay? Live accounts or paper accounts. Only education here. So having said that, please read this, pause for a moment, read it, and then we're going to move to the trades, to the portfolio, what's going on. I'm just going to show you what basically I'm doing, and I'm just going to go through the portfolio, show you what's going on the market, and you see my portfolio is not looking very well today. But there is a reason for this, and the reason is around here. I will explain this to you. But first of all, let's have a look at the charts and see what's going on in the market. So SPY, just to quickly have a look. What's going on? I have made some notes, and sometimes these charts can be unreadable, but let's just focus on what we see in here. So we all know, because of all this corona crisis and all this bullshit going on, the markets are behaving like a casino a little bit right now. They're very volatile, and what you can see here is very interesting action around now. So the markets rallied a bit, and it seemed like, okay, it crossed 200 moving average and started going up. Many green candles, way too many, and then it dropped all of a sudden and kind of stayed in this area. So it was blocked by 200 simple moving average in here, and then kind of wiggled between 300 and 315, the price of SPY, and then started dropping back down again on the very negative news on coronavirus, of course. Dropped even below this 200 simple moving average, and kind of like bounced back today a little bit. I'm watching what's gonna happen, because this clearly, like, you could clearly draw some lines like this. You see that we have a sort of like a descending triangle in here forming, which suggests down movement. However, we know that there is a huge resistance at SMA 200. There is SMA 50, so 50 days moving average. Below it, it's very high support zones, very strong support zones, and we also have a Fed, which may not allow the market to drop. So we have to be cautious. But what this chart is suggesting is that we have some sort of a weakness in SPY right now, and there is some confusion. Things can go up or down. We don't know. Therefore, it is important to hedge your portfolio at this moment. That's what I think, that's what I do. What I'm looking for is actually this SMA to hold, and Fed maybe coming and printing more money or something, supporting the markets, I don't know. I'm looking to see if this closes above simple moving average, you know, this one, and if we will have some more green candles after that. You know, this could be just a signal that markets may be, you know, bouncing back a little bit. You know, I'm still, when I'm thinking about this markets, I'm still cautiously bullish, but when I see something like this, it's time to insure my portfolio. So make it either, you know, delta neutral, or even a little bit bearish. I can always remove my hedges, but at this moment it's very weird place to be. So let's look also quickly at the VIX. Okay, so volatility index. You can see it dropped a little bit today, you know, but it's still spooked. It's still, market is spooked. It's still at the level above 26, which is like around here. It's way above the normal. So meaning that people still have a lot of fear. It dropped just a little bit today. People have a lot of fear still, so things can go up or down. Sudden changes in prices may happen. We'll have a lot of volatility. That also means that you know, option prices will be higher. The premiums will be higher. So, but it's not still, you know, the levels of the coronavirus, you know, spike. So, but it suggests that it may actually again go up, because if you look at the VIX here, you see what happened here. It kind of like reached the 20-day moving average. It bounced of it, so it acted as a support right here, you know, as a support, and we have a bounce, and we have like higher lows and sort of even, you could say, higher highs. So it's suggesting maybe the VIX is going up a little bit. The SMA is definitely going up. So 20-200 moving up, the 50 is catching up to it. So market is a bit spooked. It's just to be aware about this, because you know, we cannot just trade as in normal conditions right now, you know. So what I do on my live account is I actually do not have many trades. I don't like this kind of volatile markets. I'm not a day trader, and I have a little bit of insurance also. And I'm investing in specific types of stocks right now. I see lots of potential in gold. So, but in here we'll be just trading as if, you know, if we just take the conditions into account, and don't assume that the markets will go and crash to like 80% down, although that may also happen, but they may also melt up. We just look at the technical information, and we're going to be trading what we see. So what now? So I would usually, what I would do before I would go and start managing my positions here, I would just have a look also at the, some news and economic calendars. So let's just do that. I will bring the browser here, in the window, into the view, and just go to first like briefing.com. I use briefing.com a lot just to see what's going on the market. So if, let me just refresh this, stock market update, and I just look at the headlines. So something, you know, rebounding economic data. What's driving the market? That's the most interesting thing for me. So stocks rebound from opening lows in broad-based effort. So there is some rebound going on. We've seen that on the chart. Boeing leads Dow because they had some news around 737 Max. Okay, so Boeing is kind of like thing to watch. So why not have a look at this also? Pending home sales surge. Okay, that's driving the market. So something in real estate. All right. So you can see that we have like an increase, something going on the real estate. We can look at that as well in thinkorswim. So first of all, have a look at this Boeing. What's going on in there? This rebound. Okay, it just gapped up a little bit on the positive news. I'm not trading. I think I am in Boeing actually, but I was for the short position, so I was bearish on it. And we will have a look at this as well. But now some positive news suggests that this may go up. So interesting, because I have a position in it. Maybe just maybe it's time to manage it if this positive news continues. But the candle here still is a red candle, so we will see later. So what else? I go to the also Forex Factory, the economic calendar, to see what's going on. What kind of news do we have this week? So I just refresh this. I see already some details. So what I would suggest you guys, you always check news for the next week, upcoming week also. So if we're in the week here in the first week of July and ending June, we can also have a look at what's going on in next week of July. So what kind of events are happening there? Is there something moving the market or not? So what I would do simply would filter out some things. So I'm interested in Euro market and USD market. I could sometimes also click Canadian. So major markets, maybe Japanese yen, Great Britain pound, but not so much interested in this. I'm just trading USD, and Euro markets maybe are interesting for that as well. And also what kind of events, only major events and some mid events which are driving the markets. I'm not interested in like minor events, so I filtered that out. And now you can see there is some event on pending home sales. There was an actual number posted much higher than the forecast, so this is driving the market a little bit up. You can see the details. Then we will have some Chicago PMA. I'm not interested in this, but there is something very interesting here. 12:30 p.m. today, so almost very soon. The Fed chairman Powell will testify and talk something about the financials. So are they going to print more money or not? Currency, not money. If they're going to print more currency or not, and I just expect more of the same. So they will just tell you that, we're just going to support the stock markets, whatever, economy, and we're going to do everything that we can to bring things back up, which means just more printing. So I expect some sort of a positive news. I don't think this guy will tell us that, okay, we stop printing and we stop supporting the economy. So I think after he testifies, we probably will gonna have some up movements in prices. Something else may happen, but that's my prediction here. Then an interesting thing is gonna happen also tomorrow. There will be some Federal Reserve guys meet again. Maybe there may be some news after that. So expect some movements at 2 p.m. and after. Average hourly ratings, non-farm employment change, these things will be driving the market on Thursday. So, and also there will be unemployment rate. Again, some expectations are that it's going to be a bit lower than the previous report. Well, there is a big problem with unemployment. Actually, the market stopped actually taking into account that we have an issue there with jobs. So if somebody showed me, for example, if you look at employment claims and you look at this report, since Corona happened, we see this huge spike, millions of people losing their jobs, and that's probably not everybody reporting them actually, to the government that, I'm unemployed right now. But many did, and it's just a huge spike compared to like previous numbers, which were like nothing. If somebody told me like in 2019 that this is gonna look like that, I would say, hey guys, the market's just probably like market's like probably around 200 or something really low. SPY around 200, maybe even lower. But if we look at the chart, it's in its highest highs almost. So you see how disconnected like fundamental data is right now from the technical data. It's really crazy to trade this market. Everything is driven by this fake currency printing and Federal Reserve doing whatever the hell they want, and just creating more and more of this measurement unit, which makes people believe that things are looking good and amazing, while probably it's not the case. But the technicals, we look at the technicals at the traders, they tell us the markets are sort of strong and moving up, or maybe bouncing back a little bit, or being in a little channel right now. But in my opinion, they should be much lower, and we may expect some craziness going on in the future. So I'm very cautiously bullish to neutral right now with the markets. So that's what we see in the news. We definitely need to pay attention. 12:30 today. Pay attention at tomorrow FOMC meeting minutes. Pay attention on Thursday. And what about the next week after? It's much more quieter. So you can see there will be some unemployment claims weekly, but there is nothing really crazy happening. So next 2 weeks should be, this week should be a little bit more jumpy and crazy, but next week much less. So after doing this, I also like to look at the FinViz and look at some what's going on. So first I'm looking at this map, and I see, okay, the markets are mostly green. There are some losers, but mostly green today, and they're kind of like up, stopping here around 303 right now. That's cool. What are the news? I check the news quickly to see if there is something around about coronavirus. It's like some negative news coming up. Something about Brazil, something about stock raising, lawmaker, ECB has, and I'm just going through those news very quickly, looking if I see something very interesting. Well, nothing really surprising here. Yeah, I don't see anything that would be like panicking. So it's also some blogs, but it's for you. I already read some of these news, and I would just say, like, I'm not making me panic. That doesn't make me panic right now. I like to go to maps as well to see, not maps, to groups to see the general sector performance, and just to have an overview who was doing good, who was doing bad, and in general, like 1 month relative performance, because I'm trading mostly monthly or bi-weekly options for cash flow. I see that technology, consumer cyclical, basic materials are doing good. Also, communication was doing really good before. Now it's sort of hard to tell. It's probably like more neutral. But I can see that if I would like to trade something bullish now, I would look into, because I'm consciously bullish with my portfolio right now, I would look into technology probably and consumer cyclical stocks. So we will do some trades on thinkorswim later on as I move on with the analyzing my portfolio, and one of those stocks will be in one of those sectors. So I will show you that later. But so now let's move on to looking at the charts and my portfolio. So I have quite a few positions, and you can see, in general they're doing good. PL open, in general they're doing good. Overall, I kind of fucked up here with a little bit with my, excuse my language, I screwed up with a little bit with over-insuring it because I expected really major drop because the SPY moved below the 200 moving average and was showing big signs of weakness. They were very negative news. So I over-insured. I made my portfolio very neutral to even bearish before, and as I saw that it comes back up, I removed that insurance. Therefore, I lost a little bit of cash on it. But I'm perfectly okay with this, as I see that my theta here is generating around $367 a day with the current setup. I'm fine with that. I'm just gonna wait 3 days and this is gonna be recovered. I still keep a little bit of my insurance here using the futures. So I'm using this future contracts to insure my portfolio. Each of those future contracts causes the delta to be -50, because It's insuring against SPY. You can see that I have a beta weighted portfolio right now with quite positive delta, meaning that I'm a bit of bullish. I'm not crazy bullish, but one move up in SPY, 1 point, causes the portfolio value to increase by 143 bucks. One move down, decrease by 143 bucks. Okay, so you can see I'm still a little bit bullish on it. I'm planning to, if I see that it drops below 200 SMA again, I will probably add a little bit of insurance into this. So for now, this is the one which causes this number to be so ugly, but not for long. So just to explain this a little bit deeper, but let's go and see how are we performing in general. So what I would do usually would just go to Analyze tab and just switch through all those items. So you can see first I'm going to go to insurance. I see, okay, I'm losing a little bit on it, but that's part of the plan. It bounced back, but it's insuring me against the movement down, reduces my delta. I have a gold position as well, so a couple contracts. These are making money, actually paying my insurance right now. So you see I have like a negative on the insurance, but gold causes it to be paid off with a little bit of a profit even. And I plan to hold that gold for a bit longer. I think gold is very bullish right now. It's gonna go up. May drop a little bit, but first, but in general, it's gonna go up, the future contracts. So I like to keep them here. Then let's move on. So let's look at the Apple. I have sold, it's a short put spread. It's basically at winning position, making me some cash. The potential profit for 40 bucks, 154 right now. I don't think Apple drops below 320, so it's looking good. Let's move on. This is a healthy position. AMD is something that is actually quite of looking pretty bad right now. I was looking at it just a couple minutes ago before I started recording this. What should I do with this position? Because it's, you know, it's a short put spread and it's just about to reach the point of being in the money. So I looked at the chart, and when you look at the AMD, it's been in this channel for a while, going up and down, and I sort of didn't expect it to drop like that, you know. I thought it's gonna just continue in this channel up and down, and I just continue and just collect my premium, but it dropped, and as it was dropping, I was like fighting with myself, like make a decision, do I, if it drops below my strike price where I will be assigned, do I want to get out of this position, or am I okay holding shares of AMD for a while? And when I look at the chart, I thought, well, look at this, you know, AMD is a solid company, it's not going anywhere. It's a chip maker for also, you know, for graphic cards which are used with Bitcoin, and you know, people buying, you know, the computer power these days is very important for many kind of like useful things, whatever. People are buying these chips, and AMD is performing actually quite well as a company. So if you look at the fundamentals, and I said like, well, I don't mind owning it, and I see there is like 1, 2, 3, 4, 5 candles already. I think this will bounce back above 49. I have sold contracts at 49. I could roll down half a position. That was part of the plan. I don't have to collect like 10 contracts, which is 1,000 shares, and bind 49k to it. I could do like 20k position, but I'm thinking, you know, I wouldn't mind that as well, since this is a big account. I could have that stocks and just you know, just wait and be assigned, and wait for the movement back, like bounce back of that very strong support zone. We're like basically having a SMA going up and probably reaching that point of 48 or something like this in a couple weeks or a month. So I'm pretty okay with AMD. But just to illustrate something to you would be like, how would I basically get out of that trade if I didn't want to, you know, collect all this 49k of that position. So what I would do would be just agree with the loss right now, because I see it's losing 120 today, so I'm losing on that position, quite a bit of money on that put, sold put. This one is not basically bringing me much money as well, the one which I bought. So I'm basically in a quite shitty situation. So sold 10, bought 10. I have 3 days to expiry though. So well, I didn't know. I thought I actually have more days. So this changes things actually quite a bit. I think it makes no sense for me to close half of it. So I will just keep it. If I had more days, what I would do, I would just sell, buy back basically 5 contracts in here and sell 5 in here, just to have a half of the position and take my loss, which would be around 200 bucks. 200 bucks loss, and that's it. And then see if I could bring that money back by selling some calls after the position get assigned to me. But you see, actually it's not anymore in the money right now, but I'm kind of like in the trouble. So this is something that requires attention. I see that it's coming back up. I have 3 days. Let's say I will just be okay with that, and we will see on the next video what happened to it. I will explain that. So for now, I'm just deciding to keep it and not get out of it. I'm okay with AMD. AU is a gold mining company, and basically it's its max win. Another short put. It's not a spread, because I was also okay with holding the shares. So Broadcom, I don't have it anymore. I closed that position. There we go, it's a Boeing. I also closed it, so I don't have it. Why am I doing this like this? BGS. BGS, another winning at max win position. I could actually close it. I'm just gonna see how many days. I have 18 days. It's at its max win almost. If we look at the analyze, it basically BG, probably it's because of volatility. It brought my pink line very close to the blue line. I want to take advantage of this, and I'm just gonna close it now. I'm just gonna take money and run. So I'm gonna close my BGS. I will create closing order by vertical. I'm not gonna wait for it to expire. I'm just gonna buy it for a nickel. Back, confirm and send. And we see if this gets filled. If not, I'm okay also with this. I can wait. It's a very good place to be. So it may take a while to fill. Let's continue analyzing. Cisco, it's a new position that I entered recently. It's another short put, and so money cash secured put. And I'm just gonna be waiting a couple days, or let me see for how long do I have this Cisco. 11 days in it, and I'm just gonna be waiting 11 days to get to the max win. It looks good for now. Let's see where it goes. Seems like it's going the right direction, so it looks like a winning trade. Cisco is actually very cool to look at. When you look at the chart, looks very bullish. I did some analysis on this. I was thinking of buying a call on it actually, but I may do that a bit later. It looks to me like it's bounced off this very strong support. And even if the market were dropping, Cisco went up. So I was like, all right, that looks very bullish to me. Why not get into a call position? But then I thought like, okay, but I can also cash flow from it. So I sold some contracts at 43 bucks, and I'm just gonna look what's gonna happen with this. So let's move on to next trade, DG. So Dollar General, max win. I could be closing this right now. Why not do it? DG, let's close that one. Vertical, I want to, okay, it still has some cash in it. I will offer a nickel and see if it gets there with the volatility today. If not, I'm okay to hold it for longer. So I'm just gonna confirm and send and wait if this, oh, there we go, it got filled for nickel. Oh no, fuck, I fucked up. It's 15. What did I do? Okay, I screwed up something, excuse my language, but I closed it. I still had a win. I probably, what did I do? I probably offered too much for it. So okay, that was a bad mistake. I wanted to offer a nickel for it and basically buy it back at a nickel, but it turned out I bought it a bit more expensive, which is still okay. So what is this telling me? Yeah, it's great. So I'm out of this one. Let's continue with the next trade, EA. So this is an almost risk-free trade, which I did by buying a call and then waiting for it to increase in value and then selling a call at 125, around that value. And we see that EA went much further away, and now I'm kind of like making quite decent money. Max win is 470 bucks, and time is ticking for me, meaning that this pink line eventually gets to the blue line, and I will leave that trade like this for a while. Let's see just how many days I have in it. Still 18 days. Well, I may as well close it because I don't want to run into the risk of assignment on it, and I can be assigned and I don't want to. So I will just close EA right now and just take my money and run. So I will sell. It's 407, looks good to me. I can actually do 4 just to be filled quickly and take my money and run. Confirm and sell, good for the day. Send it, and it got filled. 405, very good. I'm happy. Cash is in my pocket. Let's continue for another position. Facebook is actually causing a little bit of trouble for me right now. So it went down. It was a broken wing butterfly, and with the potential of making money when Facebook goes up. Actually, it went down quite a bit and it's still falling. Probably following the market. It's recovering right now, and we see if we can bounce off that 50 moving average down, or will it break through it and goes up. I'll give it some time. If to recover, I still have 53 days. It's not hitting me very hard. So if you look at my actual loss is just 67 bucks, max loss 300. I think it will recover. I would like to be really in this area of 230 where my potential win is 690 bucks, but I will probably exit it before. And if it goes further, my max win 200. I can give it some time to recover. If it doesn't, stays here for way too long, I'm going to close this trade. For now, I just give it some time. So I'm not panicking on this one. Let's go FFIV. I don't even know what this is. I sold it because I probably saw some potential in this stock. What is this company? It's something with 5G, so communication company. These things are running up and high right now, and you see like even markets when they go down, this thing didn't go down much. So I saw an opportunity in it. It's above 200 moving average, and looks very strong, and looks in a channel also that it's basically trapped in this, a little channel here for a while. So my idea was to simply sell a put on it, and that's what I done, and I'm benefiting from time. So it has, as you can see, also the probability of it expiring in the money is very low. It's around 15%, so I have 85% of chances to win on this trade, and I'm gonna have to wait another 11 days for this thing to expire and to collect my 385 bucks. Looks good. I'm just gonna stay in this trade until I get some indications that it's gonna fall below this 130 or 200 moving average zone. I could actually create an alert here, but for now I'm just gonna be monitoring this manually, so I don't need that. It looks quite strong to me, and it's all right. So let's go analyze more. GDX, there we go, same. Gold index, gold performing good. I'm winning on this. I'm just gonna keep it. Short put. Gold, that's a mining company, also looks very good to me. I'm gonna keep it, and it's another short put. KDP, it's an iron condor, and you can see I'm quite in the middle of it. I don't have to do anything with this. I could actually exit and benefit from this volatility, and they just take my money and run. And I think I'm gonna do it because I think the volatility may drop further. The markets are spooked, but if things, after Powell's meeting, if things start going more, people lose the fear. The Powell says everybody to relax. People lose fear, volatility may drop, so I don't want to take that risk. I'm just gonna basically close this trade right now. So KDP, I'm gonna close this iron condor and collect the money and run. Maybe collect because the spread is kind of big. What I wanted to make of it is, let's look at the analyzed chart. It tells me 225, max is 300. So well, I want to collect, I want to pay just 10 bucks for it, no more. So if this works, it works. If it doesn't, I just keep this position. I'm gonna place this trade for the day, send it there and wait. KDP, if that's possible, because of volatility, it may or may not fill. We will see. We go further. KGC, okay. This one, it looks pretty good. Also, because of volatility, almost at max win. How many days do I have in KGC? 3 days. I will just let it expire. All right. So I don't care. I don't need to close it today. It looks strong. Chart looks strong. Yeah. It's above all moving averages. Going up. Probably breaking that zone of 6, whatever, 7. Yeah, around 7 now. It's also a gold mining company, and I like gold, so I'm gonna stay in this. Let's move on. Next one, KHC. It's an iron condor. We're in the middle of it. We have probably like 11 days. It's quite narrow iron condor because I think that it has 18 days, because I think KHC basically stays in this range, between around 29-ish and 34-ish. So if you look at the chart here, 35, 4.5, and basically 29.5 around. This is where we have our break-even zones. I want to stay in that area and just wait for that condor to expire. So 380 max win. We will see how it goes. Just monitor it. For now, I'm okay today, so I'm just gonna keep it like that. Coca-Cola. Analyze Coca-Cola, another iron condor, which is going kind of bad. Coca-Cola dropped. It's in this zone, which I call, I call this place Bermuda Triangle, because this thing can be either going to kill you, or you can get out of it with quite some benefits. So in this case would be max win 200 bucks, but if it goes this direction, it's gonna be costing me cash. Right now it's not that bad, and if I look at the chart of Coca-Cola, I see that there is earnings coming, and I see that it's actually at its very major support zone. So I expect it to bounce. If it passes this support zone, I will be in the money, and I'm just gonna decide if I want to have Coca-Cola shares or not. I don't think Coca-Cola is going anywhere. It's a very solid company, and Warren Buffett owns it, so I don't think it's going anywhere, and I'm okay owning shares of Coca-Cola. My intention was to collect the premium, but when I look at it, I can also collect the shares, and I don't mind that, and start selling calls on that. And it's also because my account is quite big here, so if it was smaller, I would probably reduce that position. Maybe not now, but if I see another red candle tomorrow, I could probably think of reducing the position to, instead of having 5 contracts or 10 contracts on it, I would just do a 5 and buy and take a little loss. So but for now, I'm just gonna keep it, and I'm all right with this. I'm expecting a little bounce. Kroger, this one is a short put spread. Looks like it's max win. How much time do I have in Kroger? I did 25 days. It's a position which went bad, and I rolled it for another couple days to reduce the damage. We will see something about rolling, maybe on some other video you will experience that. I just did it before, so for now you just need to understand that, you know, the position was going bad, and I was in a situation of this Bermuda Triangle, and I decided to give this Kroger a little bit more time and lower basically the level of my calls so that I'm in the probability zones of around 85% again. But because of that, I had to extend the the amount of days I am in this contract. So, you know, you get paid by time. So I basically took a loss here, but then because I sold another vertical spread in here, I reduced my damage to around 0. But I have to wait now for this contract to expire worthless. So the next trade that we're gonna analyze is Newmount Mining. This is a mining company. I have 2 positions in there. It's a short put. This is performing extremely good, and it's gonna expire worthless and giving me max premium. And I have also long call, which is not performing good, but the put paid for it. So I'm expecting this company to eventually go really high up, and I want to profit from that. I have lots of days on that call. So 53, I'm not going to get out of it until it goes below 30 days. So for now, I'm just keeping it there. And if you look at the chart of NEM, it looks like it's recovering. It's basically bounced off that support zone, and it's very slowly moving up, and I'm expecting it to go through that 50-day moving average as gold prices increase, and just go to the zones of 70 or even higher. But not in the short term, like 53 days. Probably my expected exit is around, I would exit it around 65-ish. So let's go back to the analyze and move on. Pepsi, that's a short call spread, and it's at maximum win right now. So let's collect our money and run. Close this one and buy back the vertical at why don't I offer a penny or a nickel? I'll offer a nickel, confirm and send, and it got filled for less than a nickel. So I'm okay, collected money, very good, profiting from the volatility. I would have been in this trade for another 11 days, but it's basically at max profit right now, so I decided to close it. Let's go to pizza, Papa Joe, or whatever it is. Looks like I'm in my long butterfly, which is broken wing butterfly. I expect the price to go up on pizza. People sitting home eating pizzas. It's moving very slowly, but I think it's very likely, you know, in the recent days it dropped a little bit, but it's very likely it's gonna bounce back. It's still above its 50 moving average, and I think people will eat pizzas. It was it was a good pick. The earnings are coming, and I think the earnings will be good because people eat a lot of pizza these days for some reason. Basically, my idea is to stay in this trade and see how this butterfly will perform. It's not gonna hit me much if the price drops back down. You know, I have like an expecting, it's quite big position. I have an expecting max win of around 3K on this if it stays in this area. If it moves further, it's 650. I don't expect it to drop below 74, 5-ish, like this. If it does, I will exit this position as it crosses the break-even point. So for now, we're still on the right side of the story, so I'm just gonna stay in this position. SLV, silver, love silver, max win, I'm gonna let it expire, I guess, because it looks like I have only 3 days in it. Let it expire and collect all the premium. Now SPY is my insurance policy. I'm just willing to pay for it, and right now it just generates a loss of 720. And if you look at the monitor here of SPY, it just adds negative delta to my position, and I like that. It's not a big negative delta, but it's big enough to hedge a part of this portfolio. I prefer much more using futures, but this one is a permanent position which I keep, and it's a long-term position for 81 days. I will exit it as soon as it gets to 60-ish, and maybe buy a new insurance for it, depending on what the markets are doing. Let's look at another one. We just have 3 more left, or 4 more. T, so it's what is the telecom company. Fundamentals. What is our T? I always keep forgetting what it is. AT&T, of course. It's an AT&T. It's telecommunications. Risk chart looks like I'm at max win, and probably this thing expires this week. I could wait 3 days, or I could just close it at a nickel. I'm gonna close it at a nickel or below today. Actually, I can even offer just 1 cent for it. Confirm send and collect. It filled. There we go. Collect premium, and I'm out of that trade. Collecting all the cash that I wanted to collect. Let's see the target. What is going on with the target? Analyze TGT. Target is basically a short call position, and it's also no, actually it was my long call, which I thought the target's gonna go up, but then I thought, I am not so sure of it. I'm sure it's gonna go long term up, so I'm gonna buy a lot of target for quite some time, until October 20th. But then over time I will keep selling short positions on it to regain a little bit of that premium that I paid. So this one basically reduces the premium that I paid for it, and it's still, I still have a full potential of target going up, so I'm still betting on it going up. So it's like poor man's covered call position, I would say, because we own something for longer, and I keep selling contracts on it, short-term contracts, to collect some part of the premium. So I see here it bounced back of this support zone here, 115. Now it touches the 50 moving average, bounced back a little bit green. I expect it to go back up. We will see what happens. This pattern was kind of like bullish. I thought it was a little W here. W is for like a win, so I would be expecting that maybe it just bounces back again, comes to test this zone for the 3rd time, and then goes up. Of course, I may be wrong. If it crashes through this and smashes through the SMA 200, it is time to leave this trade. For now, I'm okay, so let's stay in that. And now we go to work. Work is the position which I was bullish on. I basically wanted to benefit from this thing filling a gap, so I wanted to benefit on its uprising, but I saw it's not gonna work, so I sold some contracts on it to regain some of the premium, and on a put side, actually, not on the call side, to get a little bit reduce the premium that I paid for this call, long-term call, until September 20th. Yeah, and I'm gonna be looking at the charts. This position looks still pretty good, expecting it to go up. If the markets are strong, I think that's what it's gonna do. Today it dropped to its 50 moving average, but I expect it to bounce back because there is a little gap in here. I'm expecting this gap to be filled, and that's why I was bullish on it. And it's also a technology company, Slack Technologies. Technology is a sector which is doing good right now. Well, I have an alert set up at the level of 30 in case this thing breaks through it. I will look into it. Maybe I need to get out of that call, or reduce by 1 call and be a bit less bullish on it, or completely get out, depending on how strong this move's gonna be and what the markets here gonna be doing. For now, I'm feeling pretty okay with this, and I will keep it for a while. We'll see what happens tomorrow, day after tomorrow, and so on. But for now, I'm alright with this. And our last one, Zenga. It's a communication company. Let's see, communication sector, ZNGA. Yes, it's communication services. I thought it was an opportunity to trade it. It's a cheap stock. It's moving very hard. It has an uptrend, strong uptrend. Slowed down a little bit, but still above 20-day moving average, 50 and 200. It's a strong mover. Communication is doing good as well as technology. So I think this thing can go up to a level of 10. What did I do? Basically, I didn't buy calls on it. I sold some puts benefiting from the high premiums. So if you look at Zenga, I sold 10 puts for 18 days at a level of 9. So the Zenga needs to drop below 9 for me to start losing money on it. But actually, my plan would be to own the stock and start selling calls if I get it. It's a cheap stock. Therefore, if I buy 1,000 of it, I will just have 9,000 stuck in this stock. And I think it's a very cool trade for beginners as well. Being long that stock, just buying the stock would be also a cool opportunity to see if this thing's gonna go up. So that's all the positions, and basically I'm done with managing my portfolio. Now what I would do usually would be going and searching for new trades that I want to place, because I manage that portfolio now. I know where I am. I see, some of these were closed just now, so the level of this thing dropped. But I would be like, okay, am I okay with theta? Do I want to increase theta? Do I want to decrease delta? Do I want to enter some new trades today, or just stay with this portfolio right now? Well, markets are kind of like, you see, moving upwards, 303, recovering. Today will be the Fed chairman speaking. Do I want to get there today? Well, I may enter some trades, because normally in my life portfolio, probably I would just wait until the next week, because I have enough positions here to manage. I have enough cash coming in every day. My goal is to have this always above 270, okay, because that means it generates around 100K per year. So, but 367 is all right. I'm okay with the delta. So I think like, no, I'm just gonna stay with this portfolio. But because this is an educational call and I want to show you how I would enter a trade, I was preparing already on Saturday and Sunday to find some trades that would be interesting to trade this week if the markets were bullish, and they sort of are. So I was looking at generating a little watch list, and I did my scan on Finviz, searching for bullish candidates in technology. And here is like Monday morning list. Cisco I already entered, but I also have this AVGO. So I found this AVGO, and actually did already go up. I didn't enter it on purpose. Let's have a look at this. So this thing is a technology stock, and you can see a very clear uptrend in it, and then also a pattern which looks like, to me, a bounce of 200 moving average. This lines, which you see a lot of that, is basically a Fibonacci retracement, which I created from the lowest point this stock was ever after the crash of COVID until the highest level of today. And it tells me basically what are the most likely support and resistance zones for this price to stop at or bounce off. So I drew it just as a guidance for me to understand where this thing can go when it goes down and when it goes up. And you can see this is very interesting here. SMA 200 actually touches one of those zones of this Fibonacci retracement as a very, very strong, indicating to me that it's a very, very strong support zone. You've seen the market dropping yesterday, last week, and today this stock didn't drop down at all, just a little, which indicates how strong it is, how bullish it is. The Broadcom is quite bullish right now. So I would be like, hey, what can we do with this? We could benefit from this by either selling something for a premium, because now VIX is high, or we could buy some calls, which are right now expensive, and benefit from it going upwards, because this is what I expect. Or we could do some kind of like speculative other trades, like ratio trades and back ratio trades and so on, if we expect this to go up rapidly. I don't expect this to go up rapidly, especially with this crazy markets right now. It could, but I would rather sell something for a premium. And I would like to set some zone, and I already did say here at which level I would be comfortable. Well, I usually sell things when I see that there is a stronger support zones, so there's some cushion for it to fall in case of emergency. And at least 1 week support zone, which is somewhere around here. No, this is again a strong one. So 277, and I said sell some put here, well, which is below 280. 280 being far below the very, very strong support zone of this SMA 200. So I would like to create another premium trade for me to have an even higher theta. And go not too far into the future, because I don't trust this market. This market just jumps up and down. I don't like to go something above, 18 days or 20 days. So let's look at the possibilities. I would go to the trade, load the Broadcom's basically option chain, and I see 17 July looks good to me, 18 days. And I was saying something about below 280 or at 280. I usually like to sell stuff which is below delta 20 or delta 15, so it's perfect for me, selling this at delta 15, one of those contracts. I'm not gonna go big on contracts here because the premium is quite fat, so I could do maybe 5 contracts on this, 1 or 2 or 3 or 4 or 5, we will see. Sell at 280, and then I would like to build a vertical because I don't want to take this huge risk on it. I see that the strike price change is always like $10, so I will have to take quite a big risk between of $10. So that's the max possible spread here, minimum possible spread in here. So let's buy that one, and to create a vertical, and I can see, okay, I can make actually $95 on one contract. So 10 contracts would mean 950. Let's do 5 and see what it looks like on a risk chart. So if we go here, risk profile, Broadcom, I can see that I'm having a really nice probabilities here, so of success. So if I go to break-even point, more or less, it's like around 87% of probability that this trade will succeed. Max win $475. And I need to decide also on my exit. I think I would get out of here as soon as it simply goes below that simple moving average, which is 287, 289-ish, 290. Let's put it 290. So what I would do here is right now just remove this Fibonacci thing because it's causing some trouble here to see things. Remove some of the drawings and create an alert at this level of 290, just to be cautious. So Broadcom close or at SMA 200, and I'm just gonna create this and wait for the price to get to that level and then react to it. But if it doesn't, then I'm great with this trade. Let's place this trade and do it quickly here. What I can offer is basically, wait, I want to see what's the current price, 90. What I can offer is, that's also all right for me. So this is a good price for me. I can collect for $50 right now, send it, get filled immediately, and I got my cash and I'm in the trade right now. Let's see some numbers around this Broadcom quickly. So you can see that it gives me quite nice theta of $21.60 per day. It introduces some risk of delta, so I'm becoming more bullish right now. This number increased. It brings my theta up. I'm pretty cool with this. I can just wait and see what happens. So this is one trade which you can also do on your paper accounts and monitor if you like. So I guess that's all I wanted to show you for today. We've managed the portfolio. We went through the news. We went through a simple, watch list of what's going on in the market, how the VIX is. Basically, we went through the entire portfolio, which is quite big. I didn't talk much about this insurance thing here. We'll talk about this a little bit later because I'm already running out of time. It was supposed to be 1 hour video. It got a little bit longer. Happy trading, guys. I hope you enjoyed this, and we'll talk to you in a week.